Hi guys, today I had the pleasure of sitting down with John Ng, the head of fund sales at a major private bank here in Asia. It was a great chat. I've known John for many, many years. We talk about his journey from the corporate finance side right through to private banking, heading up research, private equity, and the funds business. I hope you enjoy the chat as much as I did. Cheers. Good morning, John.
Good morning, Paul.
How are you?
I'm excellent, thank you.
Man, every time I look at you, I just think you're getting younger and younger and younger. Hey?
Not at all.
You look fantastic.
Not at all.
You've got to be the coolest dude. You pulled up on your Vespa. How long have you been
It's
on
the
that?
only way to get around Singapore, I feel, anyway.
Well, it's so expensive to have a car now,
Yes,
right?
that's right.
But how long have you been riding for?
15 plus years. Well, I got my license a long time ago as a student. And then as a young executive or a young professional, you got to have a car, right? And then after a while, I just spent too much time in traffic.
Yeah.
And I said, forget it. I'll go for the easier option and get a little Vespa and zip around. It cuts traveling time by more than half.
I would imagine.
Yeah.
And it's fun. Looks like fun.
It's fun. I feel very free. You got to be a little bit careful because there are cars everywhere, and you got to really keep a lookout for people who are usually on their phones in the cars.
That's scary.
Yeah. So you gotta pay attention there.
Touch wood, no accidents yet?
No accidents yet. Touch wood. Yes.
Good.
Yeah.
So, look, for the few people that may not know you, can you be kind enough just to give a quick intro, and then we'll go back into your journey?
Sure. So, John Ng, I'm Singaporean, born and raised here. I am almost as old as Singapore's independence. 50. Singapore is about 60 this year, probably.
Yeah.
I'm 58. So
You're looking good on it, by the way.
Oh, thank you. Thank you. I keep joking. I was telling you earlier, the only thing that's moving up, not the bank account number, but the hairline. So, born and raised here, went to school here, and then went to university abroad, but worked here.
Where did you go?
I did my university undergrad in Australia, and then worked overseas, quite a few different places, and then back here. Family's still here, brothers away in London, but Singapore is home. Although I'm very restless, I always have to get out.
Where do you go? Do you go anywhere exotic or the usual places?
Been to quite a few number of countries. Furthest was Brazil.
Okay.
Took a long time getting there.
Where'd you go? Rio?
Well, we were in Rio, and then Recife is one of a small town. A friend got married there, so a couple of us flew down there.
Beautiful.
Yeah. And then places, strange places in Europe, strange to most people, like Kiev in Ukraine.
Yeah.
Been there twice. Minsk in Belarus, and then the Baltic states and
Wow.
places.
So where's on your list to go to this year? Anywhere different?
This year, well, I just came back from Warsaw.
Okay. Wow.
But I'd like to go to Montenegro.
Okay.
I mean,
So you've got this is your preferred area.
Yeah.
The map.
Yeah. Nice scenery.
Now, we've known each other for many years.
Yeah.
Let's go back a bit. So you did your MBA at Chicago booth.
Yeah.
This is when they were physically based here, right?
Yes, that's
Just near Plaza Singapura.
That's right.
Yeah. How was that?
Knee house. It was very intense.
Was it 2 years?
Almost 2 years. It was 18, 19 months. So very intense. I had the privilege of the bank being very supportive. I was working for a Dutch bank, very supportive, and allowed me to do that while I was still working.
Did they finance it or you sponsored it?
Yes, they did. They were very kind to do that.
Were you bonded?
Yes, I was bonded.
It's a great concept, right?
Great concept. I think they felt they got something out of it as well. I got something out of it as well. I like to think I got more out of it than they did, but they sent me overseas. Sent me to Amsterdam to work for 3+ years. Which I took as a nice change in environment. Although my daughter was very young and she fell down the stairs and broke her arm when she was there. But
oh no!
A little bit of drama, but it was fun. It was enjoyable. Yeah.
And so what were you doing there, work-wise?
Well, I was working for the investment management business, so I was primarily focusing on multi-manager, investment managers, fund of funds business. Was managing some portfolios and doing analysis on fund managers. But the Chicago booth MBA was tough. There were exams all the time. Every 5 weeks would be a full week of school.
Yeah.
And pretty intense. And my class had a couple of notable alumni.
Really?
Yes, I wouldn't mention who they are, but they were certainly somebody in Singapore.
Wow.
So it was a good way to meet people and really a lot of hard work.
How old were you when you did it? I'm just curious because the average age varies, but were you like late 20s, early 30s?
No, I was 40.
Oh, were you?
Yes.
Okay.
I was 39, 38, 40.
Okay.
Or maybe a little bit earlier, a little bit late 30s.
I think your age will kind of change what you take out of it. Depends where you are in your career, your journey.
That's right.
Right.
That's right.
And you probably feel like, okay, you've earned this, but you've got to make the most of it.
Yeah, they typically only take people who have work experience anyway.
Like
so
10, 15
yeah,
years.
10 years experience. They want you to bring something to the table as well. The work experience helps, and then juggling work and almost full-time MBA was something that you needed to juggle, and then your career experience would help deepen the discussions in class.
And when you were in Holland, were you covering just the European markets or?
Well, I was the only Asian in the team, so I was covering Asia managers. So I started to review and analyze a lot of the Asian managers. A lot of them were the doyens of investment management back in the 90s.
Yeah,
that's when they started investment management in Singapore. A lot of them have already retired, but it was very, very interesting. I mean, these were the pioneers of investment management in Asia.
Did you fall in love with tulips when you were there?
Tulips?
Yeah.
Tulips?
The flowers.
Oh, tulips. Yeah. Tulips. Oh, yeah. Tulips. I always loved tulips.
Yeah.
They're beautiful.
But they used to be a commodity back in the day.
Yes, that's right.
And would go for crazy money, right?
That's right.
Really crazy money.
That's right. You could buy a canal house for a couple of tulips.
Really bananas.
Yes, that's right.
And I remember when I grew up, Anne Frank was one of the books we had to read. Was it the same in Singapore?
Yep.
Yeah.
We didn't read Anne Frank, but I mean, if you study history, you would know Anne Frank in the Second World War and then how she hid in the little roof in one of these houses.
I'm getting my 9-year-old to read it now, and I've only been to Amsterdam once, but the queue was too big. Yeah. And I was there. Actually, funny enough, I was coming back from Rio from the Olympics, and I had a 12-hour layover.
Right.
And I wanted to go,
right.
but the queue was way too big.
Yeah, very popular place.
So you finished up in Amsterdam. What's next in your journey?
So after Amsterdam, I was asked to come back to head up the funds business at the old ING private bank.
Yes. You were in Republic Plaza back in the day.
That's right. That's right. And that's where I started moving into wealth management when I started working with ING private bank.
What year was that?
That was 2007.
That's when it was really taking off, right?
That was taking off just before the global financial crisis.
Yeah, and then bang. I remember because I started private banking, specializing in 2005.
Right.
But those early days were interesting.
Yes.
And then what was the journey like there before the acquisition from OCBC?
Well, my early part of my career was mostly in corporate bank and project finance, about 10, 12 years of that. And then I moved to asset management before I joined ING. So my journey into wealth management and private banking only started around there.
Yeah.
But I remember when I started my career as a corporate and project finance banker, private banking in many banks, at least in local banks, was was a totally different activity back then. It was very much bringing in wealthy clients, which is still the case today. But how you engage those wealthy clients with investment ideas and products is totally different. There wasn't a lot of investment products back then, except for FX and maybe a little bit of trading products. That took off in the mid-90s when the consolidation of banking with Citigroup and Sandy accelerated the use of investment products, right? Selling investment products to clients to generate more fees. The fee income business started to grow at that time.
Yeah.
But before that, I think the idea of fee generation in wealth management wasn't as prominent, especially in Singapore. And private banking in the 90s was very nascent, right? Because Singapore's development Singapore is a young country. Asia is a young region, and individual wealth was not as prevalent, was not as widespread. So you could, get a couple of wealthy individuals, and they could be professional people. And back in those days, there weren't that many professional people in Asia.
Yes.
So the wealth really grew only in later on in 2000 and later on. So in the 90s, wealth management was pretty much a deposit taking, client relationship management, a little bit of investments, and some sort of trading activities. Not a lot of aggressive portfolio investment management ideas.
What I liked about ING, because ING was a client of mine back then.
Yeah.
And I remember uniquely they had a DVD.
Yeah.
With Philip Damas as the CEO, and it showed all the 5 key hubs, I think it was.
Yeah.
And what I loved, it showed the office in Republic Plaza. My memory is that they then showed like a shipping tycoon in Keppel Shipyard.
Yeah.
But it kind of gave you a walk through what the life of private banking could be.
Yeah.
And it felt very James Bond. I don't even remember that.
I don't remember.
Yeah, it was a really good promotional video.
Yeah.
Now, your career has spanned multi-asset classes.
Yes.
What have been some of the key trends that you've seen on the investment side, in the last dozen years?
Yeah, it's actually quite interesting. You leave it to the banker to come up with innovative ideas, right? Financial engineering, right? That's how it got us into trouble in the first place in GFC. But the idea that they always evolve and always develop is quite interesting, right? And what's being offered to investors is quite revolutionary in some cases. So when I started banking, I was a corporate banker, and I always recalled we're lending money to large corporates, and the bank's making a spread. All right, lending money, you take you give a loan, and then you get repaid, and you get your interest. And I always wondered what it would be like if you were a bank, if you were an individual money lender. It's pretty much the same, right? A money lender is like a bank. A money lender, a bank is an organization. It takes money from depositors, and you lend out to corporates. What would it feel like? And you always ask, why does the bank make so much money? How is the bank able to make so much money? And you realize it's because of the spread differential, and how you increase leverage by taking $1 and lending out 5 times or 4 times. So I always wondered, why couldn't an individual do that? And you couldn't, because you can't lend out more than what you have.
Yes.
Right? So this actually has brought us where we are in the area of private credit. And everyone's talking about private credit. It's pretty much that. If you're a private credit lender, which a lot of these firms are now able to do, you are actually replacing a lot of the activities of what the banks used to do, right? So the development of private credit products for individuals has given them an access, a way to provide the kind of lending capability to borrowers, which in the past you couldn't. So that's a nice development, and of course, you would also have heard of the development of what they call evergreen, semi-liquid private assets. Where in the past it was only institutions who could access, now you have clients, individual wealthy clients who can access these investment solutions as well. So it's a nice development. It gives the wealthy private client more investment options, broadens their access.
Can you just give a quick explanation to what semi-liquid evergreen for those people that are not familiar with it?
Yeah, so everybody's heard of private equity, which is taking equity in private companies. Private credit is basically lending money out to private companies. A loan is a loan is a loan. You can, I can lend you $50 and you pay me back. That's a loan. It's an IOU. You can do it as a form of a fixed income bond, right? It's a public issue. That's also a loan. Or it can be a private loan, that's in the bank lending out money to a company A and receiving principal and interest back. So that's private credit. Private equity is just lending, taking a stake in a company and hoping you can improve the company and sell the company out for in later years for a higher valuation. So in the past, private credit and private equity were the domain of very large institutions, right? Your pension funds, sovereign wealth funds, large institutions, family offices would write a check to Blackstone, KKR, Carlyle, and the private wealth client would never have the ability to access this.
Yeah.
Firstly, it's small, and secondly, there was just the GP, which is Blackstone, Carlyle, KKR. They would not want to go and talk to 50 individual clients.
Yeah.
So in the last, couple of years, in the last decade or so, or maybe slightly less, they have realized that wealthy individuals do have a lot of excess cash that they could tap as well, not just the institutions. So they've created a vehicle where the underlying investments continue to be the same. Private equity investments or private credit loans continue to be the same. But instead of having all of it into these sort of investments, they would keep some of that money that they've raised in liquid investments. Could be cash, could be treasuries, something that they could sell out very quickly if an individual wanted to sell out and redeem, right? So in the past, private equity, private credit, you get in and it's locked in for 10 years. You can't get out. You have to wait for 10 years before you get your money back. The semi-liquid development, or what I call evergreen fund development, now allows the investor some window of opportunity to get out, within what I call a hurdle, right? If everyone wanted to get out, that would be difficult. So they have a little bit of a hurdle, a gate that they will allow those who subscribe to at least redeem. So that helps give optionality to an investor to not have to sit through the entire 10 years.
Yeah.
Yeah, that's a nutshell.
What a great description. Now, in your current organization, you head up fund selection, private equity. Just talk us through what is your daily grind. What does it look like for you on the job?
So I used to do all of it. Now I'm just focusing on the fund sales. So the daily grind is pretty much, looking for new investment ideas, gaps that we have on the shelf, which we think investors could be interested in. Most of the investment solutions are already there. The bread and butter, long only solutions are pretty much covered, right? The standard stuff on the shelf: bread, milk, cheese, most of the stuff's there. Stuff like caviar, truffle, the more esoteric things, these need a little bit more time to find. You need to go to specialists to bring on board, and that's when we are looking at hedge funds, a lot more of the hedge funds that we want to put on the shelf, private assets that we want to put on the shelf. So a lot of the time we spend on now is sourcing, looking for people like that who would want to work with us and allow us to distribute some of these products. So we spend time talking to managers, fund managers. We spend time educating the relationship managers.
How do you do that?
Clients.
Do you like once a week or once a month sit down and have like a presentation or
Yes.
walk the floor?
Yes. So the team spends a lot of time engaging the front office.
Yeah.
Right. And every bank will have 200-300 relationship managers depending on the size of the bank, and each relationship manager will again have like 10, 20, 30 clients. So the specialist would have to educate the bankers, right? Do trainings, explain to them what these products are, provide material, right? Fact sheets, cheat sheets, explanatory documents, create these documents, educate the relationship managers so that they in turn could then bring these materials armed with enough knowledge to explain to the clients. Clients are interested. They might say, look, can we get a specialist to explain it a little bit deeper? Then that's when we go in and help the relationship manager at least provide a more substantial explanation of these products.
Great explanation. If someone was coming up through university now and wanted to end up within this area of the bank, what would be the route today? Because it's a little bit different from when you started out, right?
Well, again, I started out in corporate bank and project finance before I moved to asset management and wealth management now.
But now that private banking's like very established,
Yes.
you can in theory come straight into a private bank.
That's right.
And work your way up, right?
You could, but maybe being, as you said, older in the first couple of minutes, I think foundation is important.
Agreed.
Right. At the end of the day, when you are explaining a financial instrument or a financial product to a wealthy individual, he could have won the lottery, he could be a businessman, he could be a professor or a heart surgeon. They would come back to basic questions of what am I putting, where's my money going?
Yeah.
And if you keep peeling the layers of the onion, you need to go back to foundational questions, right?
Mm-hmm.
And the basis of all investments is, what does it do? Is the money go into a company? What does the company do? If it's going into an asset, what does the asset do? So foundations of understanding how things work it is important. If you just jump in straight and start to sell things without having a foundational knowledge, I think you get stuck after a while.
Yeah.
Right? Depending on the client. If the client's sophisticated, and we have more and more sophisticated clients these days, and they peel the onions. They want to know a lot more. So technical knowledge is key. You should at least understand the basics of investments and accounting. Basic understanding of a balance sheet is important. A balance sheet and P&L is important.
And what about a background in research? Because you've run research teams for many years, but I always think that's a great place to start, right? What do you think?
Well, research is one area of investment or banking, right? Again, it's foundational because you are forced to understand the basics of how a company operates, and how does it translate into an accounting statement, right? With that knowledge, everything falls in place because then you're able to explain things. So that helps. If you don't go into research, you study a CFA or an MBA or did accounting, it helps you in the understanding of how companies work, how companies make money, how companies lose money, how companies overextend themselves by borrowing too much or not enough, such as the balance sheet and the return on investments is not strong and your share price don't move. So these fundamental basics of investments will help you very much. So if your question is where do you go to start?
Yeah.
If the question is where do you go to start? Maybe I'm biased, but I always said that if you start in the area of corporate bank or corporate finance or research for a couple of years, at least in the initial stage, it helps you set the foundation by which you can build a lot of things on.
Yeah. I think that's very important,
right? Without the basic understanding of accounting and understanding of balance sheets, once you understand that, every company has the same sort of framework.
Yeah,
and it helps you to explain a lot more things.
Well, at Bank of Singapore, you built the in-house research team, right? And that's when we started working together.
That's right.
What were some of the key challenges during that time and, developing the processes?
So we had a little bit of, research already, but we needed to complete the full suite, right? So we had equity research, fixed income research, funds, private equity, manager selection. So to build all those things out was somewhat greenfield. There was quite a few things that we didn't have, some things we had. And to hire the right people, the right caliber, we had to bring in senior people.
You did, yeah.
You helped us bring in a couple of senior people. We had to bring in junior people, and then help them to understand where we want to move towards, right? Because wealth management and private banking, not the front line, but the investment side, I see it a lot very similar to asset management, right? It's asset gathering. It's gathering funds from clients, and then you have to be able to manage those funds, either through advising them or through discretionary management. And if you don't have a good team who have the capability to do research, securities research, or manager research, it's very difficult to convince a client that you should leave the money with you, right? He will just leave the money with you and then say, just leave it in deposit. Thank you very much. Don't buy anything from me. I don't trust you, any of your recommendations. So to build a credible team, you need to get senior people, you need to get junior people, and help them understand that what they're doing helps to strengthen the credibility of the bank when the relationship manager goes out there to provide advice.
Well, all the people that we were privileged to place with you, the one thing that I felt they all had in common is they were highly cerebral.
Yeah,
right.
That's right.
They were deep thinkers, introspective.
That's right. Analysts.
Yeah, analysts, but poised, because I find, this is a broad generalization, but if you look at an equities person versus an FX versus a fixed income person, they tend to have different personalities.
That's right. That's right. They do.
So in your current organization, significant strides have been made in Asia. What do you feel moving forward are some of the key growth opportunities in your space now in the next few years to come?
Okay, so having worked in Europe, I mentioned I was working in Amsterdam in asset management, and we managed a lot of the private wealth money. So we got exposed to a lot of what the clients wanted to do, what the clients wanted, didn't want. And in Europe, being a more established or having a much longer history in wealth management, the needs are different, right? And Asia being a younger region, obviously it's just catching up. So when I first started wealth management, the what they wanted was very different from what they want now. 20 years ago, people were happy to speculate on stocks, right? The .com era, buying Yahoo and flipping, pet.com and things like that. It's very different today, because today the second generation of wealthy businessmen are taking over.
Yeah.
Right. The second generation of the children of wealthy business owners are now taking over. They are more educated. A lot of them have better degrees than I do.
Yeah.
Right. And they understand the theoretical learnings of what investments are.
But do you feel, I find with a lot of the second generation, my observation is some of them, it's all about making sure the family keeps the money.
Yeah.
They may not be in the same growth mode or mentality.
Yes, that's right.
And it's almost like the first generation.
Preservation.
Yes, that's the thing, right?
That's right.
And the first generation, they were the pioneers in growing that business.
Yeah.
But it's evolving so quickly now with technology.
Yes.
It is kind of crazy.
Yes.
Talking of that, innovation, tech, how are you seeing that impacting what you guys are doing in your decision-making on fund selection?
Tech, fund selection. Manager selection is always going to be a research-driven, personality discovery process.
talk us through that. Like, how do you evaluate funds? That's what I've always been curious about.
Yeah. So there are thousands of managers out there, thousands of funds out there. It's not possible to go and see everybody.
Yeah.
Right.
So where do you start?
So there are always databases that we start with, right? Morningstar, MSCI, different Mercer. Organizations that have a lot of database on many of these managers. And at the end of the day, it's performance. We do screening. So data dumping, data analysis, data screening is the first step to see who's consistently up there, right? If the guy's consistently up there all the time, every year, that's a worry, right? And you end up like a Madoff. But you shouldn't have someone who's, top quartile top decile one year, bottom decile next year, middle down. So the variation of where the position is not something we like. Somebody who's consistently in the top quartile, right, is what we would tend to try to uncover.
And will you look at specific sectors that you guys are interested in or regions?
That's right. So in terms of the areas of selection, we first need to, again, I say, where's the gap? Let's say we didn't have a technology manager, right? And we wanted to get a technology fund. There are a lot of technology funds out there. So we do a screening, all right? We do a screening and find who's consistently in the top quartile. And then there could be 3 or 4 consistently up there. And then that's when we start to do the interviews, right? Talking to the managers, trying to understand how they did it, what they do, what's the process, what's the thinking behind how they do things. And once we are comfortable with that, sometimes we even go down to the managers to see them, kick the tires, and make sure they have warm bodies in the office. We then onboard these funds onto the platform, and then offer them to our clients and say, these are the ones that we've done some checks, right? They are okay. They're pretty good in this area. Where if you want to get into this area, this is the person, or this is the fund that you would select. And then more importantly after that is to follow up.
Okay.
Because what's happened in the past and all these analysis is backward looking, whether they're able to consistently continue what they've been doing in the past, right? So the follow-up reviews, yearly reviews, annual checks, sales support, information disclosures, all those things are very important for us to ensure that these managers stay on the shelf.
What about the back end, the digital tools that you're using now? Is it different? Like when you're consolidating this data and you're looking at it, how does that work?
So as I mentioned, we use data crunching data in the first part to screen them.
Or is it on an Excel spreadsheet? I mean, how you?
Well, everybody uses Excel. We'll have to use Excel as well, but the database is not Excel. The database is from the provider of the data. So from there, we will do multiple screenings. Right? And we'll slice and dice.
I've always been curious what it looks like behind the scenes because I've never seen.
Sure.
It. Yeah.
So we could go to a data provider and say, okay, give us the data of all the tech funds that you have on your database for the last 7-8 years.
Okay.
On an annual basis. Right? Annual 2015, 16, 17, all the way to today. Right? Just rank them.
Yes.
Give me the dump, and then we'll screen them year by year by year. And then we'll see who is consistently up there. Because first of all, we tend not to use any manager that doesn't have a track record. Any fund that is, at least minimally 3-4 years.
Yeah.
Minimum size of the fund where they're registered. Because in Asia, because they are collective investment schemes, they are regulated instruments, right? So there are regulations that require them to be registered in countries. So we need to have these basic criteria. Once this basic criteria is cleared, then we screen them and rank them. And as I said, the ones that continue to filter up to the top will be flagged out, and we will then make calls to them and say, look, we're interested to find out a little bit more. Can we have a call? Yeah. So the data analysis is done at the beginning. You could do it manually. The manual part is really slicing and dicing. What criteria you want to put there?
Yeah.
But the data is static.
Okay.
Right. As I say, the calendar year performance is static. that's a backward-looking data screening exercise. And then post that, we do the interview and then the follow-up.
So let's talk a little bit about private equity.
Yeah.
What's your vision for the future of private equity, in particular within your organization?
Yeah.
And how do you capture those opportunities?
So private equity and private debt, we group them as private assets.
Okay.
All right. That's equity and debt. So it's definitely a growing area. 10 years ago, everyone's heard of Blackstone, KKR, but they were not very accessible to the wealthy clients.
Yeah.
Some banks already had it, some banks didn't have it, but 10, 15 years ago, most wealthy individuals would not have access. Fast forward 10 years to today, they, as I mentioned earlier, a lot of these so-called GPs, they're called general partners, have created vehicles that allows a lot more wealthy individuals to be able to access these private equity, private credit investments. So it's a good development. It provides more options.
Is there a minimum amount?
The minimum amounts are usually set by the bank.
Okay.
Some banks set higher, some banks set lower, depending on the kind of clientele they want to attract. So it's democratizing the access a lot more than before. So that development is interesting. And because the penetration of private equity, hedge funds have been around for much longer time, the penetration of these alternative investments in most clients' portfolios is still very, very small. People are still trading NVIDIA, trying to get in and out of NVIDIA, trading FX and options and FX. These historically have been much more prevalent, right, in the last 15, 20 years. Structured products, FCNs, knock-in, knockouts. A lot of wealthy individuals have been doing this. Great for them because they get some investment solutions. Great for the bank because they have got something to sell. But the alternatives in private credit, private equity, and even some hedge funds have been a lot less. So the exposure for a lot of these investors is much smaller. We like to see this grow, and I think this is where the growth is taking place. I think over the next 5-10 years, the exposure for most clients should increase because now it's a lot more accessible.
Yeah.
So, and I think it's a good thing.
Of course, it's a great thing. You've been in leadership roles for a long time now. Looking at your own career journey, some of the leaders that you've reported into, what are some of the key traits that you try to, utilize and encourage, in your management style? And what do you really, regard highly as leadership traits?
That's something I hold dear to my heart. And this is, I'm not being facetious. I actually do mean it. Servant leader is an important trait.
Okay.
Right. I used to be, all males in Singapore go through the army.
Yeah.
Right. We all have to go through the army, and you see leaders, and you see people who follow, and you see people who abuse their leadership power. Right. And it is a human trait to overplay your power, I suppose.
Yeah.
Like a better word. So I try to be conscious of that. Being a servant leader is important. Having integrity is important. Being transparent and honest, I think is crucial, because at the end of the day, you want people. A great leader is one who can convince people to do the things that they otherwise feel reluctant to do or don't want to do. A leader is one who can convince them, I'm not doing it because of my own glory. I'm doing it because it's the right thing for the organization. I want you to come along with me, and I got to explain it to you, right? And to be able to bring him along or her along to do the things that is right for everyone, right? I think that's a challenge.
Yeah.
If you only give the impression that you want the staff to do something because at the end of the day, nobody's dumb, right? Nobody's that dumb to not be able to see through things.
Sure.
So if he gets the impression that you're only doing it because it's for your benefit and he gets nothing out of it, it's going to be a tough call. It's going to be a tough sell. So I think leadership is about being transparent, having the at least making sure that they understand that you have the integrity that you're doing it not just for yourself, but this person, the staff benefits as well. You bring everybody up.
Yeah.
If you're not able to do that, people won't follow you.
Yeah.
They'll do it because you're the boss and you have no choice and you're forced to do it. He will leave.
Yeah, it's not a collaboration, right?
Right. Correct.
And I'm curious because this is one question I love to ask people. So, you've obviously had your own appraisals, but you've conducted a lot.
Yes.
What do you think is the best way to approach an appraisal as an employee, if you're looking to further your career?
Sorry, how as an employee?
Yeah, if you're an employee, so say you're thinking about, I want a promotion, I want to take that next step.
Yeah.
Do I ask? Do I not ask? Do I be aggressive or not?
Yeah.
Or because I find most people when they come to me on the career coaching side, get a little bit stuck here.
Yeah.
And they leave it to last minute, and then they complain when they were overlooked for something.
Yeah.
I don't know.
Yeah. So I think it's good to have these conversations, and that's why I said transparency at the beginning, right? If you're a staff and you're talking to your boss and you have certain aspirations, the good ones actually, the ones I've experienced, the good ones actually say, you tell me, boss, what do I need to do to get here? Yeah. What do I need to do? The boss will have some ideas. If he doesn't have ideas, he will think about it, right? At least it forces him to think about it. And if you say, look, I want to move up to my next stage, what does it take? Is it too early? Am I moving too fast? Am I moving too slow? Do you have an opinion, Mr. Boss? And your boss will be able to tell you, you need to work on A, B, and C, right? And I've promoted people based on the fact that you are here today, right? I know you want to get promoted, but I want you to move here. Yeah. And I will help you get there, but you have to show that you are able to get there. Some people just can't do it, and you have to be transparent. To get to the next level, you're required to have A, B, C, right? You're great at C, you're great at A, you haven't got B. Yeah. And if you can't tell him that, he's going to keep trying and trying and trying, and he's great at A, and he's great at C, and he's keep doing that, but he doesn't have the B. Yeah. And if you can't tell him, you're great at A and C, but you just don't have the B, and B is a requisite to be able to move here. If you can't tell him that, he's going to be frustrated. If you tell him that, you're great at A and C, you just don't have B. Yeah. I can help you, but I don't think you're going to get there. That's being transparent. And it's very difficult for him to say, he hasn't been told. Yes. If he works on the skill set to improve B, then you can see the results. Yeah. So it's really a two-way conversation. You really need to have a two-way conversation, and you need to trust your boss that he's not playing you. Yeah. If you feel your boss is playing you, then you've got a different consideration. You got to think something else, right? What I find interesting is what I advise a lot of people is there is beauty in the preparation and power of asking, because if you ask your boss or the senior management team to take on more responsibility, let's pretend, okay, they give it to you as easy, but if they don't give it to you, you will recognize one of a few things. Number one, they just don't think you can do it, or they don't believe in you, or they don't like you. So you get that no. But also, I think what happens is, let's just say you're my boss. You say, look, Paul, not right now. This is what we're doing. Yeah. But you're now vigilant that I'm ambitious in the right way, because I haven't been overly aggressive. Yeah. I've shown some support. And the way that I receive the no is actually very important. Yeah. Because if I throw my rattle out of the pram, not so good. Yeah. So I think there is power in that. Absolutely. You have to make it known. Yeah. You have to trust that the organization is impartial. Yes. Right? That's got to be some level of trust. If you don't trust your boss, you shouldn't be working for him. Yeah. That's my first rule. Very good point. Right? Yeah. If you don't trust your boss, don't work for him, because you're going to be frustrated, and he's going to, chances are, you might be right. Yeah. Right? That you shouldn't trust him. But if you have a conversation, then it's clear. You told me 6 months ago I needed to work on this. And the last 3-4 months, you've given me feedback that I've been moving in the right direction. So what happened? Yeah. right?
Yes.
It's transparent. You can't go back and say, oh, I didn't say that, or I didn't say this, or you didn't do that. It's transparent. And that's the only way. And if I don't have a problem telling somebody, this is what I need you to do. I need you to be A, B, and C. You're great at A and C and you don't have B. You're working on it, I know, but that's not you.
Yeah.
Right? So work on A and C. This is role there. I think this is great for you. You'll be much happier, because if I give you this role, you're going to fail.
What I found working with you when, as my client, was if we didn't find the best, most relevant or blueprint candidate, you would always go back and say, well, look, let's analyze this from different angles. Yeah. And I always found that if you have people that are reasonable around you, it makes the conversation a lot more, a lot easier.
Of course.
And you always, the goal is to find the right outcome or the best outcome.
Yeah.
Talk a little bit about ESG and sustainability. Does that impact what you guys do on a daily basis, your team?
Yeah. So where I'm at, ESG is a big part of the organization's ethos.
Yeah.
Organizationally, we put a lot of effort in trying to be sustainable and having the right social norms. Things have changed, right, in the last couple of months with new U.S. presidential direction. I wouldn't say leadership direction, but I think personally, I still think it's important. I can't say I'm a tree hugger. I love trees. I love plants. I do gardening. But I do sense there is an impact, right? And if climate science is real, I tend to believe in science, you would want to do something about it. So organizationally, we do pay attention to that. We do look for ESG products. I can't say that a lot of investors are enamored by it. They were maybe 2-3 years ago when it was on the front page of everything.
Yeah.
Now it's not even on the back page.
It's funny that, right? Because it was so trendy and now that's changed.
It's a cycle.
Yeah,
right?
This always.
Yeah. So do they work? It will work if you have patience. If a company is polluting the waters, but still providing huge earning growth all the time, it will be great in the short term.
Yeah.
In the much longer term, naturally, it would not do well, right? Because somebody will come in and say, look, I can do the same thing and not pollute the waters or not use child labor. So it depends on your time horizon. You can't take a short-term view on this.
I want to look back at, your career and some of the most pivotal moments. So when you look back at your career, what would you say was the one pivotal moment that shaped where you are today?
Okay, so I mentioned I started in corporate bank and project finance, which was very much a credit activity, right? The bank providing financing to companies, credit foundations of banking. After about 10, 12 years, I wanted to move to the public market side, right? The public capital market side. And that's where I moved from project finance to asset management, which is public markets, like stocks, bonds, listed securities. That switch gave me a good rounding of what investments and finance was about, and how the world works and how things work. If you're just on the credit side, you understand the credit markets, you understand, debt. Public markets is very different. Public markets is full of people speculating, then prices go up and down, not because the valuation says it's X dollars, it's because there's a greater fool theory, right?
Yeah.
People will chase NVIDIA all the way up to the top, never mind what the earnings are. People will chase Tesla or certain stocks, even with no earnings, because there is a belief that there's a lot more human psychology in public markets than there are in private markets.
Yes.
It's actually a very interesting thing, because philosophically and psychologically, they are, like you said, when we were doing research and you're looking for research roles, the credit guy is very, 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 very different from the public market guy.
Yeah.
The public market guy will pay a lot of attention to P&L, earnings growth. The credit guy will just pay attention to the balance sheet, right? So you have very different kind of personality. The credit guy is always risk averse. he's always afraid of failure and defaults and stuff. Public guy who say, hey, look, earnings growth, but no earnings. But never mind, sales is high, sales is growth, stock is going to be worth X. Very optimistic, a lot more pessimistic.
I'm curious. Have you ever thought about, beyond work, maybe lecturing or teaching? Because the reason why I say this, I remember when I first started working with you, and we had quite intricate searches, and what you were looking for was very specific, but you were kind enough to granularly explain to me, Paul, this is what it is, and like you've demonstrated today. But have you thought about that?
Oh, definitely. It's in my later years now. Actually, I am doing teaching.
Well, you're doing it on the job anyway.
I'm working full time, but I do teaching at one of the universities.
Oh, I didn't know that.
I'm already doing it. Yes.
Oh, there you go. So I was going to say it was a natural calling, but you're already doing it.
Yeah, I'm
okay.
already doing it, yes.
Oh, great. How long have you been doing that for?
I've done a couple of sessions. I'll have another one in the coming months.
Do you enjoy it?
I do enjoy it. I try to give a very practical spin to things. I think that's why they
Well, it's more tangible then, right?
Yeah. It's not just theoretical.
Yeah.
We all went through school.
Yeah.
And we all know that what they teach you in school is theoretical. When you're on the job, it's very, very different.
Yeah. You need to be able to apply it.
Yeah.
I think, is this in person, the lectures?
Yes, it is. It is.
Because my wife is an assistant professor in US.
Oh, okay.
And during COVID, I saw her when she was teaching online, and what I thought was ridiculous was maybe 2/3 of the student didn't even turn the camera on.
Oh,
then what are you talking to?
Yeah, you can't.
You need some engagement.
That's right.
Right. At the very least.
That's right.
Have that, because I think that. So I say to my kids, when you can, try and sit at the front of the class.
Yeah.
If you can't, just engage with the teacher, because otherwise they don't know if you're interested.
Yeah.
And that way, when you ask questions, you're going to learn a lot more.
Yeah, you learn a lot more. That's right.
A lot more.
Yeah.
I'm curious, what motivates you to get to work today? Because, different parts of our journey, whether or not, your kids are young, you're being assertive in your career, but today, what gets you up in the morning?
Actually, throughout my career, I've always gotten excited to get up and go to work. Well, actually, no. Let me rephrase that. Nobody looks forward to getting up in the morning to go to work.
Some people do.
Some people do. I can't say I'm hopping up and I'm so eager. Yeah. What actually gets me thinking about, hey, today, these things I need to do. It's almost like checking a box and having to do them.
Yeah.
And if you're doing it in an environment where you have good colleagues, right? People you enjoy working with.
That's the game changer, right?
That smoothens the process.
Yeah.
Right? It doesn't matter what it is. It smoothens it. Because for me, there's always something to do every day.
Yeah.
Right? And it's not a choice. So if it's not a choice, you just don't have to think about whether you're happy or sad. You just got to do it. You got to do it. You got to do it. You got to take the garbage out. You got to take the garbage out. It doesn't matter how you feel.
Yeah.
So for me, it's the same. But it lubricates the process when you think that, I got to work. I'll work with these fun people, nice people. I enjoy working with. I'm quite social, so I'm quite personable. So I enjoy.
You've always walked the floor, right?
I always walk the floor.
Yeah, because I think that's. Yeah. By the way, I say to people that is something that is massively overlooked.
Oh, you got to.
You have to, right? And if you stay in your cubbyhole, it's no good.
People don't know you. They can't engage you. When you try to engage them, they're going to be a bit, because they don't know you. So we're human beings. We interact.
We need that interaction.
That's right.
What favorite financial model or strategy do you implement, on a regular basis at work?
Well, because I run the sales, I would, not so much a financial model, but systems where I can track how we're doing, right? How the business is moving.
Are there things that you've coined, like phrases or term, like in my company, I've got things like RDL stands for rational deductive logic. Every time you've got a problem, don't come to me with a problem. Come to me with a solution and you break it down. Yeah. But I'm just curious, have you created that kind of...
I haven't, no, I haven't been so intellectual to create these nice...
Really? I've got loads of it.
I'm sure you do, Paul.
Just for fun, right?
That's why you're a coach. No, but the idea is the same, right? you're going to face challenges, you're going to face hurdles, you're going to face things that you need to resolve. There's always something to resolve.
Yeah.
Front end in manager selection, and the back end in operations, there's always something to resolve. A relationship manager is not happy about something, it's got to be resolved. The client's not happy about something, it's got to be resolved. So it's always a problem-solving exercise.
Yeah.
So that's something like I mentioned earlier, something I need to check off the box. You got to do it, you can't run away from it, right?
Yeah.
So if you come to terms with that, this is just the work, you got to solve problems, and you're solving it with clever people who are there to work with you. A lot of times, a lot of these guys are smarter than me, so I rely on them to solve these problems.
Yeah.
So,
but you lean into that because some bosses, quite frankly, they don't. But do you hire really smart people?
well, I'm lucky. I'm lucky at where I am.
That's
Truly, I mean, whoever's watching this and you know where we are, I truly say it that I've been very, very fortunate to always have had people I enjoy working with.
Yeah. And because one of the things I say to people when I work with them is when you're moving on in your journey, it could be upward in the organization, internally somewhere else, or to another organization. Other than your family and friends, who do you want next to you?
Yeah.
People sometimes think it's a weird question. I said, no, think about it. We spend more time with our colleagues
That's right.
at work than we do with our loved ones.
That's right.
So even if it's not the exact individuals, you want to make sure, I always say, as a leader, we all need great running mates,
Yep.
stable mates.
Yeah.
And most of us, we need multiple champions and a godfather or godmother in the business.
Yeah.
And if you're isolated and you have none of those,
Yeah.
forget about it.
Yeah.
If there's one thing that you could change about the finance industry,
Yeah.
what would it be in a utopian world?
Impossible. They won't be called finance industry anymore. But you were asking about ESG.
Yes.
So I look back at my career, right, and I mentioned it before. The beginning of the career was corporate banking and financing and credit, which was the backbone of basic banking, right? Lending money to companies for them to grow and develop and build new things and expand. And then move to the public market side, where it's the capital market side, where it's about financialization of banking products. The first is a lot more social. There is something that the society needs. And I can say this, I'm not afraid to say this because I know all bankers, traditional bankers who really think about what they've been doing, how they've evolved, how the industry has evolved. The public market, unfortunately, is about avarice. Traditional corporate banking is about social growth and social development. If it's all about making money without any regard to what the society, how the society benefits and society needs, then I have a conflict. In fact, after having worked 33 years in banking and finance, I'm beginning to be a lot more philosophical about this. And I say this in this podcast, and I'm truly feel very strongly about this. If we only care about the next dollar and how it enriches me, we're going to end up with another revolution. It is no secret that, the things that have been happening in the last 10 years, Brexit, Trump, the 0.1% owning 50% of everything else. Capitalism has gone awry. It is not good for society. It is not going to end well. I'm not the first to say it. I know there have been philosophers, Michael Sandel, for anyone who is interested to read. He's a philosopher. He's a political philosopher from Harvard. He explains it very clearly. If the evolution, the development of capitalism and free markets and unconstrained growth at all costs has led to a lot of problems. And if we're not careful, we will end up with revolutions. I mean, from the time of the Romans all the way up to, more recent times, revolutions have always come about because of inequalities. And in the last 20, 30, 40 years, the inequality has gone worse and worse and worse and worse. So this is, I'm very, very, I get very emotional about this because I've been in this whole journey.
Of course. And
the last 30 years has been nothing.
And you feel the writing's on the wall, right?
The writing is on the wall and very, very clear to me. If you ask back to the same question, what I can't change it, but I can amplify it and I can talk about it. And you're asking me if I'm teaching. I do teach. I will teach the theoretical foundations of finance and economics, and how is it applied in the real setting.
Yeah.
But I would also add in the implications of it getting too far.
Yeah.
Because we have been exactly right in the period where this unabated growth, greed, and me, myself, and I has led to where we are today. I think a lot of problems.
Listen, I appreciate you sharing.
Yeah.
I really love that. What would you say is the most memorable piece of advice you've ever received professionally in your career and in your personal life? Two different things.
Yeah, I was thinking about that question. And I can only remember one experience. And I'll tell you because it stuck with me, right? It was earlier in my career, and you usually remember these early in your career because when you're young, you're impressionable.
Very poignant.
You have a boss who is like 20 over years older than you, and he sits. And it came about because I was in his room, and he was correcting all my stupid mistakes in my like credit paper, and his wife calls.
Okay, go on. I'm looking forward to this story already.
Yeah, so it was a serious. He was badgering me. How can you write this? Where's your analysis? You're not thinking. What the hell is this? And it was like tearing my analysis apart. And then his wife calls up, and then of course his tone changes, and he goes, "Yes, dear. Yes, dear. Yes." Dear. And you can see his face moving from a dragon to a mouse. And after a couple of minutes, he puts it down and he looks at the paper again, and he looks at me, life is not perfect. Nothing is perfect, we just have to, and he completely diverted from financial analysis to, life is not perfect. And he got back to it. So it does tell you a lot of things, right? He was a guy I looked up to, very, seasoned banker, but still humane and humble and
I love that.
Yeah,
I love that.
So that carries through everything, right?
Yeah, of course.
In the office, nothing's perfect. Products, nothing's perfect. You make money, you lose money. You just need to understand that life has cycles, and you just have to try to work through things.
You've got to roll with the punches, man.
Yeah.
What was one of the biggest lessons you learned during your time at Bank of Singapore? Because from ING to BOS, the curve, the growth was enormous.
Yes.
I'm just curious, looking back at that period of your career.
Yeah, so having come from Europe, as I mentioned, right? In Europe, a large part of the wealth AUM were invested in what they call recurring business.
Yeah.
Right? Discretionary portfolio management, investment funds, portfolio construction, asset allocation. At Bank of Singapore, when we were there, myself, the CIO, product head, we wanted to follow a similar model, right? As I mentioned, in the early days of wealth management, mid 2000, early 2000, mid 2000, it was very much a transactional model, right? Very commission-based business, right? You sell this, we sell that, we sell this, we sell that, make a lot of money from the commissions, brokerage kind of business. So I think, which is great, right? It makes money, but we also realize that in the time of a financial crisis, nobody wants to trade. Everyone sits on their hands, no commission. So where do you have a recurring stream of income where people don't pull money out and sit on cash? that's when we wanted to develop a larger part of the business to more fee-based funds, discretionary business. And that's when, CIO, myself, and the product heads started to drive harder this idea of recurring business. And we managed to do that. So the penetration of recurring business when we started in mid-2000s was about 2-3% of total AUM, right? And then next following 10 years, it had grown to more than 20.
Amazing.
So that's significant.
And by the way, that's 20% of what the AUM had grown to become.
Yes,
Which
correct.
was a significant growth.
Correct, growth.
Yeah.
So I think it helped because in the times of stress and market volatility, in my experience, right, the guy who's got a short-term security there, pull it and sit in cash. The guy who's got put money in a discretionary portfolio or has a systematic portfolio of investments tend to keep it there.
That's right.
Right, and that keeps it
Keeps everything nice there ticking.
Yeah, that's right.
In terms of, I just want to know, I know about this, but for you, like, how do you keep the work-life balance, or what do you do to de-stress outside of the office? Because I know you don't smoke or drink. So tell me about you, John. What do you do? How do you stay balanced?
I like music. I play the piano. I took up piano during COVID. Just like a lot of people took up a lot of new things during COVID. Yeah. I've always liked music. I've always enjoyed the sound of the piano. I never had lessons when I was young. I actually took it up in the last 2+ years.
Have you done that formally?
Yeah, formal lessons.
Okay.
The teacher would come and.
So you got a piano in the house?
I have a piano in the house.
Lovely.
A cheap piano I bought, secondhand. It was 20 years old, but still works. I got a teacher coming in to teach me every week. I got to learn the scales. I got to learn the sight reading. But I spend most of my time playing my own garbage. Right? For those of you who don't know, YouTube solves all problems.
Yeah.
You learn anything on YouTube. So
it is amazing.
I'm playing rock. I'm playing jazz. I'm playing all kinds of stuff from YouTube, and then I have to spend 20% of the time doing the formal stuff at the piano.
That's amazing.
And I do gardening. I enjoy gardening.
And then just to wrap up, if you could have dinner with any three, well-known famous people, right, dead or alive, who would they be with?
Mother Teresa.
Okay.
Donald Trump. Albert Einstein. They can't be different, as far different from each other as possible. So these three. I really like to understand one,
Interesting.
Spiritual standpoint, one from a current market standpoint, and one who's just cerebral.
Beautiful. John, it's been an absolute pleasure.
Thank you.
So good to see you again. Thanks for taking the time.
Not at all. Not at all. Been a pleasure.
Good man. Thanks, John.
Thanks.
Cheers.